Yo, what's good? What's good? Happy Tuesday. Good morning. Thank you guys for being here today. Give me just 1 second. I'm going to pull up the screen. Just 1 sec. Drop some sevens in the chat if you guys can hear me okay. Drop some sevens in the chat if you guys can hear me loud and clear. I'm almost set up. Give me 1 second. Cool. Awesome. All right, guys. Morning. Happy 4th. I know for a lot of you, you may not even be in the United States, but today is the 4th of July. It is a US dollar bank holiday, so you guys are probably not seeing much movement. You may have noticed that the indices are not doing anything at all. So let's dive right into the DXY, okay? So in terms of price action this week, okay, for me personally, I would love to see us come down a little bit lower before we continue to move up. And I believe that getting past this insufficiency is going to be the biggest part. So since that insufficiency there to the left, about 50% of our range, is giving us support, I want to see if price action, giving us resistance. And so I want to see if price action gets enough resistance to push us down to these equal lows right here. Right, and back into this unmitigated area here. Okay. So that's the area that I'm looking for in terms of the dollar. It's just making our way back into this area. How we're going to do that, that's the part that I don't know. And I'm personally not, obviously, this goes without saying that I'm not going to push any buttons today. Okay, but given price action, this level right here really gets my attention for this week. So let's get there first, and then we'll go from there and see if we want to make our way to those equal lows, or if we want to continue to the previous daily high. Previous weekly high. Happy 4th, brother. Okay. So in terms of the dollar, I'm just looking for shorts here. A lot of liquidity built up before we continue moving to the upside. Okay, but really this area holds down the bullishness for me, and the last evidence of bullishness is down here. So either area works fine for me to look for targets. Whether we're looking for accumulation, then the shorts, the lows are going to be targets, or if we're looking for price action to distribute, then we'll look at the highs, right? Now for the US dollar, yesterday when we were here, we mentioned that we did get this distribution above the highs in this previous area of distro here. Okay, but once we distributed above the highs, Okay, you can see that we reaccumulated down here in this previous area of accumulation. Okay, now one thing different, the only difference is this happened above the highs, and this is taking place above the highs as well. So for me, an accumulation ideally would need to be below the lows for me to really find this attractive. Just like this distro was above the highs, I would like to see an accumulation below the lows. The main lows that I'm seeing, I mean, we did take out previous daily low, but main lows that I'm paying attention to are these equal lows here. And maybe just getting back into this previous area of accumulation. Okay, but overall, I want to see price action come back and take out this specific high, that one. Okay, the high of yesterday. I anticipate price action to just stall. Okay, within this range. I don't believe that we're gonna get beyond previous daily range much at all. Okay, so just keep in mind that it's a funky week, but you gotta understand this, like, out of all the weeks out of the year, there's quite a few funky weeks. It's like you can't just not trade every single funky ass week, or that you claim to be not to like, or whatever it may be. But understand that you have to get used to trading, I guess, operating in environments like this, by being able to retain yourself from taking executions on a lower quality setup. So train yourself to be a part of price action, be a part of the day, but not a part of the liquidity, especially on days like this. Yeah, definitely. Yeah, there's not going to be anything today. I guarantee you guys. We're just looking at price action. Okay. And reviewing from yesterday. So one thing that we did mention yesterday was the accumulation from this imbalance. Okay. The accumulation from this imbalance and the distribution across the board. So we were looking at NASDAQ having that higher high, Dow Jones having that lower high, and S&P having that lower high. Now, although the bullishness is very clean, okay, we have very clean areas across the board to come back and accumulate from. Okay, daily imbalance, daily imbalance, daily imbalance here. See NASDAQ and NASDAQ with the daily imbalance also, right? So we have daily imbalance here, there, but NASDAQ was the only one that took that previous daily high. So given that reaction, notice, what time is this? 4 a.m. Okay. What was Dow Jones doing by 4 a.m.? 4 a.m. moving lower, creating a lower low. As NASDAQ created a higher high. Okay, NASDAQ takes out liquidity. So now you can... So now a lot of individuals may ask, like, okay, Bash, I can identify divergence. I see the divergence between the two assets. I can see that one took out the high and the other ones didn't. But what do I do with that? What you will do with that information is the assets that have taken out liquidity. So let's say you're looking at a divergence here, and all the other assets are creating lower highs, and your asset, diverging asset, is creating some higher highs. Okay, well, basically this is happening. The one that created the higher highs, you want to see that one seek out liquidity. Okay, if it did sought out for liquidity, what you will look for is for the high that took out liquidity to be respected. Okay, so therefore NASDAQ on the longs from the new week opening gap, we couldn't long it to a new high because it doesn't make sense to go for a new high, not from here at least. Okay, new week opening gap was our overall objective. We hit that very nicely, as you guys can see. Asian lows right here, and then we hit this new week opening gap right at 10 a.m. accumulate and just been pushing up since, but very, very clean. Okay, because the divergence, we were also identifying the high, the candle that swept liquidity and created an imbalance. Okay, that's your manipulation candle right there. Manipulation imbalance right there. Okay, you guys can see price comes up, respects, and then continues pushing down. So we just really stayed within that hourly and new week opening gap range, as probably will be today as well. Oh, the volume is very low. You know what, bro? I really thought you were talking about I deadass thought you were talking about like DXY volume, like, you know what I mean, like liquidity volume. I really thought that you were talking about that, like the volume in the DXY was very low, because I was talking about how it was the 4th of July. That's so funny. I'm gonna assume that the volume on my voice is very low, so I turned it up just now. You guys should be able to hear me a lot more loud and clear. Let me know if that becomes low again, and I'm happy to switch that over. I forgot to adjust my settings this morning, so I appreciate the reminder. Very kind of you. Okay, so as we're looking at price action, okay, right now, NASDAQ took out the highs as the other three didn't, okay, and moved lower. So now, let's look at price action, okay? Let's focus on price action here, okay? By London, Dow Jones was moving lower, okay, into a lower high, lower low. Okay, by London, NASDAQ had already taken out the high. So here we have Asian high. Okay, when I see this divergence, okay, not always will if I'm going for longs, I tend not to go for the high of the day or that previous high or the main high that is an obvious target. And the reason is because divergence usually means that a trend is coming to an end or is becoming weaker. So if our trend here is becoming weaker, we may get a reversal. Okay, now reversals, if we're bullish, obviously it's going to reverse to the downside, and if it's going to reverse to the downside, I want to be out of the longs sooner than later. Okay, divergence will indicate to you whether you should hold a trade or not, right? So given these levels of divergence, NASDAQ taking out the high, Dow dismissing that high during London, given that divergence, now we can assume, all right, because there is divergence, I'm not going to look to hold my trades for a long period of time, at least not yet, right? Because if we're looking at divergence at a higher high, you kind of want to work that to a higher low, right? If you see divergence at a higher low, then maybe that's better to hold the longs from, right? But you don't want to be holding on a divergence that may start a retracement. I know that's a lot of information. I know that may be a little bit more advanced for some of you, but I promise you that is a really big gem right there, okay? That is a huge gem that's going to save you a lot of money if you learn how to digest it, all right? I took down longs yesterday. Nice, brother. Nice. Yeah. It started busting from our area. So the area that we shared yesterday was this gap right here. So we were looking at that gap to potentially give us that rejection. We got the gap, but now I'm looking at the gap and imbalance. That overlap right there really gets my attention. So I'm going to be looking for longs out of here. And personally, just going to be looking for longs to take out the highs. Okay. Give me a second. All right. Yesterday, I took S&P longs when we were all together. took S&P longs together. So just kind of giving you guys that walkthrough here. S&P didn't have the incorrect bias, but it definitely had very poor timing. Yesterday I mentioned that I didn't really want to trade during this price action, and this is the reason why. So you can tell when price action is liquidity or when price action is being manipulated. Okay, here you can clearly see. Look, I'll show you. This right here is the manipulation. Okay, this right here is manipulation. All this right here is when smart money's sleeping and is on a bank holiday. That's what this right here is, what price action looks like when price action is healthy. Okay, it will have little to no manipulations, little to no insufficiencies, and a lot of back and forth. Now, guys, you guys are going to have to give me a second. I have a doggo Argentino that needs to go outside, so give me 1 sec. All right, sorry about that. Yeah, so I have a doggo Argentino. I don't know if you guys know what breed of dogs those are, but they're massive dogs, and he's 12 years old. 12? No, actually like 14 years old. So on top of that, he's very old. He's blind and deaf. And so when he needs to go outside, he'll like start pattering, and he's so old that he'll like bump into stuff. Like he'll bump hard into stuff and start knocking stuff over when he needs to go outside. Yeah, it's really, really funny. But at the same time, I can't leave him there. When he needs to go outside, when he's got to go, he needs to go. So anyways, enough of the dog talk. Okay, manipulation. Okay, manipulation versus healthy price action. Drop some 8s in the chat if you guys can spot the difference. If the difference between them is very clear. There may be some manipulation here around the New York Open, but very slight. Now, as you guys are looking at the manipulation and you're identifying whether you can see the difference, what is the main difference between manipulated price and healthy price action? Drop it in the chat for me, because I don't see any 8s. I don't see anything. We got 11 people that are sleeping. Still sleeping or what? Okay. So what is the biggest difference between manipulated price and healthy price action? Remember, you want to be in the side where manipulated price is happening. You don't want to find yourself with any healthy price action. All right, guys. I don't see any replies. I don't see anything. Venno, thank you, bro. Thank you. I appreciate you taking the time to answer that question. Yes. Yeah, I was gonna wait until somebody answered. I didn't really care how long it took. So yes, basically price action. And it's a lot more simpler than that. What's manipulation? Like what is the one thing that shows us that smart money is behind the move and is manipulating price? What is the one thing? Manipulated builds up a lot of liquidity. I think it's the opposite, to be honest. It's the opposite for sure. Okay, so it's a lot more simpler than that, actually. So it's not wrong at all, though. You guys are not incorrect. Okay, neither of you are incorrect. Impulsive moves, yeah. With that one, no. Okay, so what creates or differentiates manipulated price from healthy price action is imbalance and balance, fair value gaps, imbalances, insufficient price action, whatever you want to call it. Okay, notice the imbalances here are very strong, impulsive, and large. Strong, impulsive, and very large. This is yesterday's. This is what you want to align yourself with right here. Okay, this is what you want to align yourself with. Good, healthy price action that's pulling away. This is what we got into yesterday. This. You guys see this right here? Back, forth, back, forth, back, forth, back, forth, back, forth, back, forth, back and forth, back and forth, back and forth, back and forth. Right? Yeah, Jonathan, you got it, bro. Yes, insufficiencies, imbalances. Imbalances are the ones. Okay? Imbalances show us that manipulation is taking place. If there's no imbalances, there's really not much of an entry. If you have to sit there and dig through for an imbalance, there's no entry. Okay? Yesterday, 5-minute didn't give us anything. If I don't see much of an imbalance within the 5-minute, 15-minute, that's honestly like a really red flag for me. Okay? If I have to dig any deeper than the 5-minute for an imbalance, that's a red flag for me. Okay? The imbalances should be clear. The impulsive move or the manipulation should be clear and easy to assess, like easy to identify. Should be nothing that is confusing or anything that looks in terms like this. This is like the biggest example I can give you guys right here. Manipulated, and then this is not manipulated. Okay. This is healthy. This is manipulated. Even though the healthy move was bigger, the manipulated move must smaller. Even though the manipulated move was smaller, you want to align yourself with the manipulated move, not necessarily in the direction that it's moving in, but align yourself in the direction of your bias. Okay? And the way to align yourself is by identifying these guys on the left. Okay, that's how you identify a good entry scenario is if you can find the manipulations in price action and wait for those and only those to get and played out. Okay. Trading is very simple, guys. That's the thing. It's like I want to be very clear about that. Trading is very, very simple. Very simple. It does not have to be complicated. We are either in a manipulated price action or unmanipulated. Healthy price action, because I saw this this comment earlier. So no insufficiencies left behind. Manipulated. Okay, this one was it. Manipulated price builds a lot of liquidity. Yes, it does. But you can see this manipulated price. Check this out. This is also another way that you can identify manipulated price. Look at manipulated price. Manipulated price takes the upside. Manipulated price shifts price action to the downside and takes downside liquidity. Okay, so we take both liquidity right there. Now, manipulated prices don't have to seek out liquidity, but they create insufficiencies. And here's a really good way to identify that this is truly a manipulated move, right? Because the manipulation may not have been for a setup specifically, but it was definitely there to seek out liquidity. Drop some eights in the chat if that makes sense. I don't want to move on until this part right here makes sense to you guys, because this is very important. This is very important for your knowledge and for you to understand the difference between manipulated price and unmanipulated price, healthy price action. This is a manipulation, one that seeks out liquidity, creates imbalances, right? Not always will it seek out liquidity, but for the most part, that's a really good sign, is when it's seeking out liquidity, when it's creating insufficiencies, when it's shifting the market structure. Awesome. I'm glad that's starting to make sense for some of you. That's the goal. Is so you avoid taking trades on very unnecessary days. I want you guys to write this down. The goal, as you progress through your trading, the goal isn't going to be how can I get more entries? How can I get more entries? How can I get better at my entries? The goal is going to end up being not you taking more entries, but you taking less entries. Okay? The goals here isn't to find better, higher quality entries, but the goal here is to mainly to reduce how many losses we do take. That's been my focus for this entire journey, is to reduce how many losses you guys do take. Anybody in my 6-month program knows that the first thing that we're working on all the time is reducing your risk, right? How can we reduce the risk? How can we reduce how many losses we take? How can we, that's right there. That's why we do what we do, is to increase your level of accuracy, not by getting better and better, sicker ass snipes, but to reduce the low quality setups that we are executing on, to avoid low probability setups, to identify ourselves either on a high probability scenario or a low probability scenario. That's why we're here. Okay. So yesterday, participated on these longs. Okay. Something that I will tell you guys, if you are going to participate in price action that looks very, very healthy, all I will tell you guys, if you guys do participate in price action that looks very healthy, try to hold and not move your stop loss, and try to hold your stop loss at a 15-minute setup instead of a smaller time frames, because the likelihood is, what is healthy price action? Let's go back and review this. What does healthy price action look like? Back, forth, back, forth, back, forth, back, forth, back, forth, back, forth. All of this healthy price action. Okay? So because this is healthy price action, what are we going to do? We're going to find your entry, then go pull away, then come back, then 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 pull away and come back, then pull away, and slowly pull away until we're out of your area completely. So that being said, a lot of my 1-minute traders are going to get wrecked here, right? That's why I don't get too much on the lower time frames. I believe I got in right here. Or no, I believe I got in with you guys right here. Okay, and price action just kept going back, forth, pull out, back, forth, and then essentially took me out and ended up going our direction either way. Right? It ended up all going our direction regardless. But the thing is, healthy price action. If it's healthy price action, you're not going to be with the manipulated price that's going to move away from your area in like 5-10 minutes. No, you're going to be in a price action that's probably going to linger around for a couple hours. Okay? So if you are going to choose to trade during holidays or bank holidays, or you're going to choose to trade during like very slow days, just be aware that your higher time frame, your like 15-minute, or I guess not higher, but your 15-minute to hourly setups are more higher probability, because the smaller the time frame, the more likely will return to your entry very fast. Okay. Want to step up your trading? Join the 6-month program. Absolutely, yeah, brother. Yeah, we've been killing it for the past 5 months. The 6-month program is coming really close to its final month. Now, for anybody that wants to become a part of the 6-month program, reach out to me. The description in the description down below, you guys can find the link and reach out to me. Let's work together. You can DM me. You can book a free consultation, whatever it may be. Even if you have any questions in regards of your trading, guys, if you want to get locked in, if you want to pump the quality of your trading up, if you want to create a solid trading plan, a solid, reliable trading plan, if you want to create solid trading strategies and tendencies like controlling your emotions, staying calm, achieving a peace and profitability mindset, hit me up. Let's work together. I'm happy to help anybody who is willing to get locked in for 6 months with me and work with, consistently profitable traders, okay? And work with and be in a community of individuals that are as committed, okay, as you are. So we'll work together, guys. One sec. Let me see. Right here. All right, cool. Dow Jones. Oh, NASDAQ. I put NASDAQ first because I'm always doing Dow Jones first, and this is my way to keep away from it. So NASDAQ, okay? NASDAQ comes into our new week opening gap. This is the part where I'm just amazed by price. Check this out. 5-minute. What are we missing here? For this accumulation to really look attractive, what are we missing here? What's missing here? Insufficiency. Okay, there needs to be an imbalance for the insufficiency for the accumulation to be confirmed. There wasn't an insufficiency, and again, if you have to dig down through time frames to find your insufficiency, that's probably not the area. Okay, you don't want to force an insufficiency. The insufficiencies are always going to be nice, clear, and they're not. They're not all of them. Some are in the 1 minute, but not all will be in the 1 minute. Okay, just be aware of that. I think I need 2 more to go. 2 more one-on-ones, probably. Yeah. We're, like I said, guys, we're coming to the ending of this 6-month program. The first one, the enrollment is open all the way through to July 23rd. On July 23rd, I have my first 6-month program call with the new program, and it will be closed. I will not open it till next year in 2024, because I like to get locked in with 5 to 8 individuals that are going to be committed to themselves and going to be committed to trading, right? So it's very exclusive, very limited. So if you guys haven't yet, book your session with me and let's see if you qualify. All right, guys. I am coming pretty close to an ending here. Yeah. Do you guys have any questions, comments, or observations? Drop it in the chat for me. But if you don't, I am going to be looking to wrap this thing up. I know I've been saying that I'm going to do this giveaway. I'm going to release... I'm still doing the giveaway. I just keep picking really bad timings for the streams. So given that it's a holiday, I honestly forgot that today was the 4th of July. I wasn't really prepared for it. But given that it's a holiday, I'm going to wait till Thursday's stream to finally give you guys the giveaway details. It's not hard. It's going to be... I'm going to post something on to give you guys kind of like an idea of what it's going to be. I'm going to post something on Instagram. I'm going to ask you to go tag 3 or 2 of your homies and then give the post like a share. It's going to be fairly easy, very simple, and nothing too technical or complicated, all right? So with that, guys, I'll catch you guys on Thursday. I will more than likely, I guarantee you, Abundant Capital, Matthew, he will more than likely do a call tomorrow. If he does not, I'll see you guys on Thursday. But either way, more than likely, we'll see you guys tomorrow on Abundant Capital's New York stream. And if you guys, again, have any questions, comments, or observations, let me know, okay? There's one more question, so I'm going to answer this. Which time frame is relatively better for someone to look for an imbalance when price trades into a new week opening price? Me personally, there's not a specific time frame. Okay, if we're trending to the upside, right, like this asset right here, trending to the upside, a 5-minute imbalance would do. But if we're like in a retracement like this and we trade down into it, I would need like a 1 hour or 4 hour break. You know what I mean? So in this situation, given that it's very unique, right, because we're very bullish, we're not in a retracement, I would say at least a 5-minute break. But if we are in a retracement and coming down into it, I would at least need like an hourly break or imbalance. Okay? That's a really great question because it differs for sure. Whether you're pro trend or counter trend. If you're counter trend, you need that 1 hour. I need that 1 hour plus imbalance. If it's not counter trend, and it's pro trend, okay, and it's the trending asset, you're going with the trend, like for example this higher low to create a new higher high, I would only look for a like 5-minute imbalance, 5-minute break. It doesn't even have to be a 5-minute imbalance, but it has to be a 5-minute break that created an imbalance, not necessarily on the 5-minute, but ideally, guys, stay on the 5-minute till you find consistency there and then switch over to the lower ones. There's nothing that you can't find on the 5-minute that you could find on the 1 minute. I promise you. Yeah, of course, brother. Of course. Always. Again, guys, super happy and blessed to be here. Happy 4th. I'll see you guys either tomorrow on New York session, or I will see you guys for market mentorship on Thursday to review the week. Okay, for any of my 6-month program students or anybody that would like to join the 6-month program, if you join before Friday, okay, I will allow you guys to join and be a part of our NFP call. I do news streams exclusively for my private mentorship. Okay, so if you join the 6-month program before Friday, hey, you guys can join us for our NFP stream for the private exclusive 6-month program. All right. But with that, guys, I'll catch you guys on the next one. Take care. Hit me up if you have any questions. Hit me up on Twitter. It's probably like the best way. Don't DM me, just tweet at me and I'll get back to you. All right. Take care, guys.